Hello traders, my name's Dez here at Grok Trade, Senior Analyst and Mentor. It's Thursday, January 27th, 2011. Markets up yet again. Check this out, Dow at 0.04% up, so not by too much, but more importantly, check this out. The S&P up 0.22%, but the NASDAQ is noteworthy. At 0.6% in the green. The Russell's about what the S&P was doing at 0.21%. The bank showed some nice strength, sending the VIX down another 5%. Commodities took a nosedive. Gold, silver, all of them nosedive today. And here we are taking a look at the broad markets. I'm also probably take a look at gold just to do a little technical analysis on that for a lot of you who are interested in that. But we did clear another high today. Higher high, higher low, closing under 1300 on the S&P. I mean, that 1300 is going to act as resistance, and I should just get a line going there too. And there's our line. That's a resistance line. We need to get up over that. But tomorrow, GDP pre-market coming out 1 hour before the market opens. GDP. Wow. That could certainly move the markets one direction or the other. Today, we had news that come out saying that it was unexpected news that jobless claims spiked up quite a bit, highest levels since last October. And they're saying that that's a lot of it's weather related, but we'll see. And but anyway, check this out. I'm going to go over here to the Russells, and the Russells. I showed you this in a recent video, but we've rallied back, but that line, that 800 acted as just perfect resistance today. And so we need to get over 1300 on the S&P. We need to get over 800 on the Russells because this is kind of a bear setup. To be quite frank, if I was just looking at this as a stock setup and the markets were in fact bearish, I'd be looking at this as a bearish play, a drop below the 20-day moving average, nice reward to risk ratio. I mean, I'm all over that like like a chicken on a June bug, like white on rice, like ugly on a monkey. And you get you get that free of charge. Anyway, but that's important to me. We have a rising wedge, bearish divergence. We did break down. Now we have what was acting as support, acting as resistance. So if I come over here to the NASDAQ's faring a little better because we have rising wedge, bearish divergence. We broke down what was acting as support, acted as resistance yesterday, but we pop over it today with a bullish pop above the MACD histogram line, that zero line. We're above it. So if the NASDAQ helps lead the markets, I have hope for the Russells. I have hope for the the S&P and for the Dow. Now, that GDP can act as a catalyst too. And if that comes out with an unexpected number to the downside, that could send the market straight down. Let's see where the Dow is here. The Dow, we get what's called a tweezer top formation. You just can't even get more perfect than that. We get up here, tweezer top, and we get these spinning top type formations. Very toppy looking, gang. Very, very toppy looking. And this looks to me to be a top. And again, if this was a stock and the markets were in fact bearish, I'd be salivating on this as a possible play to the south. Why? It has that rising wedge type feel to it. You're overextended, which means you are overbought, and you have a tweezer top with spinning tops. Oh man, all I'm looking for is confirmation to the downside with a little bit of volume, and I'm all over it. So I said I'd take a look at gold. Let's do so. I was showing you this in a recent video. Oh, maybe this was an instructional video that I did with the Grok mentors. But anyway, look at this. Higher high, a higher high, but not as high. See the sloping? So it's a rounding formation here taking place on gold. So back here, we knew that we were in significant trouble back going into January. I mean, there was just no secret. It was the writing was on the wall for sure. And then now we're just crashing down. And so let's take a look at see where we're at now. We really needed to hold that support line, which we didn't do. And then we have this support line that when we broke that, it just sent the market or sent this straight down. And you know the question is, where's our next level of support? And the next level of any meaningful support. Wow. Oh boy, right here, I would say 126.60. 126.60 would be an area of some meaningful support. So I'm going to bring over here the weekly because gold's looking bad. Next meaning support for as the weekly is concerned is actually 123.40. 123.40. Actually, it's a little lower than that. 123.30. 123.30. I mean, it's just, it could be in a free fall. A free fall. And look at the volume pick up on the weekly. And it's only Thursday. We're not even counting Friday's drop yet. If it were to continue to drop. A lot of profit taking place. Let me draw another trend line here that I think will be of importance to us. And, oh, interesting. On the weekly, gang. I'm not going to get this line spot on. Spot on. Long video, I know. Oh, we're at that right now. Look at that. We are at support. Gang, as far as the weekly is concerned, we have a huge chance of a bounce. On a weekly, what I would expect here is actually a hammer to form. I see Friday, maybe going into Monday or Tuesday, seeing a big drop in gold, but I see it rallying back and giving us a hammer and then popping or just getting a doji somewhere on this line because we're at a major support line. Look at this. Support. I mean, that is a tight support line. So if it breaks any lower, let me say, if we go down any lower and close below that trend line for the week, so tomorrow, Friday, if we close below that, yes, a free fall could ensue for sure till we get down here to the 123 number. Well, there you have it. You get the very best technical analysis here at Grok Trade. If you don't know about us yet, please go to freeonlinetradingeducation.com and partake of the chart school and go into the 101 courses. 4.5 hours worth of great trading education, all free of charge. Take care and safe trading, and pass this on to one of your colleagues. They will thank you for that.